Hey everyone, and thanks for jumping back into the cryptoverse. This is the weekly premium video. In this one, we're going to talk about the Bitcoin dominance. Okay, so last week we talked about Ethereum dominance. This week, in fact, we are going to be discussing Bitcoin dominance. Of course, in addition to Bitcoin dominance, we'll go through the markets as well, provide a general update there. Obviously, there's a lot of volatility, right? To the upside and the downside. Recently, mostly to the downside, so we'll talk about that as well. So let's go ahead and jump in. So last week, again, we covered Ethereum dominance, and we looked at, why do we think, or why do I think, I should say, why I think Ethereum dominance will go up over time. This was something we laid out in 2019, in fact, for the Ethereum dominance, that Ethereum's valuation against Bitcoin, and of course, thus the dominance of it in general, would likely trend up with time, and it would likely take away market share from other cryptocurrencies. Now, with the Bitcoin dominance, we would expect it over the macro scale to trend down. Okay, over the macro scale. Now, obviously, we try to talk about, short-term moves in the market. When Bitcoin goes parabolic, like it did in late 2020 and early 2021, you expect the dominance to go up, and that's what happened. But then following that, right, following that parabolic move, we had that long phase where we were well above the 20-week moving average, and altcoins just had months to run, right? They had months to run. So with that in mind, with altcoins having such a long time to run, then you get the dominance dropping like a rock, okay? And since then, it's been all over the place, right? I mean, look, at certain phases, it certainly seemed like it was going to go up, and then at other phases, it felt like it was going to break out to the downside. But more or less, the dominance has just been range bound between about 40% and about 48% for many months now. I mean, for about half a year or so, the dominance has mostly just been going sideways. Okay, between those bounds. Now, I still think that the dominance will ultimately go higher than where it is today before we're going to see, like Ethereum valuations of 10K or more. Okay. It's hard for me to get on board with the idea that altcoins can have parabolic surges again without Bitcoin doing something more interesting than staying range bound between 30 and 60K, right? It's just hard for me to imagine a scenario where Bitcoin can just stay at these levels and then altcoins can continue to go up 10x or 5x even, right? So that's why I would say, I certainly think it seems reasonable that the dominance at some point should go higher than 40%. I don't think it's necessarily going to go back to, say, like 80, 70, or 80%. I mean, you can see that it's generally in a macro downtrend channel. I mean, anyone can see that. But that doesn't mean that it can't occasionally spike up at certain times. I speculated that in Q4 the dominance would go up, and on October 1st, it's funny because it started spiking back up. Literally on October 1st is when it started, but then since then we've come right back down, and this could be a triple bottom. One of the things I would still say is that the dominance for Bitcoin would go up most likely if Bitcoin were to either go parabolic or to have a nasty dump. Okay. And I mean, now that we're below the 20-week, so when you're above the 20-week, Bitcoin going down doesn't necessarily affect altcoins, right? Because, as long as we're above the bull market support band, altcoins can retain that confidence. But unfortunately, when you get to the point where Bitcoin's below the bull market support band, like it is right now, you have to understand that if it drops, like if Bitcoin were to drop, then it's more likely that the dominance will go up at this point, right? Because the confidence is not the same as it was when Bitcoin's above the 20-week moving average. It's the same reason when we look at, say, Ethereum's performance against Bitcoin, when Bitcoin goes below the 20-week, I think it's always underperformed Bitcoin until Bitcoin gets back above it. That's not necessarily what I want to happen. That's just what has historically happened, like 7 out of 7 times. So the point is to say, like, if Bitcoin drops, then you would expect at this point, especially for the Bitcoin dominance to go up because we're below the 20-week moving average. If Bitcoin can reclaim the bull market support band, and then if it does go parabolic in a few months or more than a few months away, I know a lot of people are still holding on to the idea that Bitcoin's going to go parabolic again in 2021. I have been adamant the entire year. There's no reason that has to happen. If anything, if this cycle is going to lengthen out, which is what I think, then I mean, I don't think we're anywhere close to another parabolic phase. Okay. I just don't. I mean, and I said this months ago, right? Even that there's no reason that Bitcoin has to go parabolic in Q4 just because it went parabolic in other Q4s, right? Just because it went parabolic in 2013 and 2017 does not mean that 2021 has to be a parabolic time for Bitcoin. Now, I know that there are still people sort of holding out hope that it will go parabolic in the next 3 weeks. But look, I mean, while there's always a chance they could be right, I sincerely doubt it, okay? And I mean, of course, this is one of those videos that if it does go parabolic in the next 3 weeks, then people might come back to this video and kind of laugh at it. But I have a very hard time imagining Bitcoin going parabolic in the next 3 weeks to go, going to like 100K, 200K, and then having a crazy blow off top, and then coming all the way back down over 3 weeks. Bitcoin generally needs a lot more time than 3 weeks to really get something moving like that. Okay, I mean, even the one back in late 2020 and 2021 was preceded with a fairly long build-up, held the bull market support band. We trended up for 3 months, and then we went sideways for 3 months, and then we came back down, right? And then we came back down for that 3 to 6 month lull before finally getting a new all-time high. So it's been a crazy market cycle to say the least. If you went back to 2019 and told someone to plot out the course that this market cycle would take, I don't really think there would have been anyone that would have predicted it to go up to 64K and then back down to 29K and then back up to 69K and then back down to 42K. It's just all over the place. And furthermore, if they did predict that, they probably wouldn't have predicted it to take place over the time frames that it did, right? Certainly, if you just think of it like a zigzag up, you could say, oh, yeah, well, 64, then 29, then 60, 69, then 42. But you might not have expected it to happen over the course of, say, 7 or 8 months. So remember, every market cycle will be different from prior market cycles. You cannot assume that they will play out in the exact same way. I see all sorts of theories out there that say, well, it happened this way, so then it's got to happen this way again. Look, that just doesn't really pan out usually. If everyone's looking at a chart and saying, oh, it's going to go parabolic this month, it just generally doesn't happen. It usually goes parabolic when people don't really think it's going to go parabolic. So, going back to the Bitcoin dominance, again, going back to the reason why I'm still weighting my portfolio as heavy Bitcoin as I am, it's just because I have a hard time imagining a world where altcoins can put in another 5 or 10x without Bitcoin having to first prove something, okay? And if that's the case, then I still want to minimize my downside risk. And that's the reason why I'm still only putting in 10% of my weekly DCA into alts, okay? And that's the reason. I know some people say that's too low. And look, I mean, depending on what your risk tolerance is, you could be right. If Bitcoin holds and then trends higher, and then altcoins recover quickly, then you could be right? You could be right in the sense of, or at least in the sense of maybe you want to take on more risk. But for me, I'm just not interested in that type of risk at this point. I mean, I'd rather just put a majority into Bitcoin and/or Ethereum, and then just ride it out until the market looks a bit more bullish, and then I'll go heavier into altcoins. Maybe even making some trades from Bitcoin to altcoins, like I did back in late 2020 and early 2021. But until then, I like to minimize my risk by focusing majority of my DCA on Bitcoin and Ethereum, and just 10% alts for me now. That's my strategy, okay? And it's because I look at the dominance and say, I would argue that it's hard to imagine, again, just to reiterate for like the third time, it's hard to imagine Ethereum, or any of these other coins going up 5x, 3x, 4x without Bitcoin having to do something. And that's why I think that Bitcoin still makes the most sense. Now, there is a scenario where I could theoretically imagine the Bitcoin dominance going down, but Bitcoin not necessarily going parabolic. And you might say, well, what is that? Well, if Ethereum, first of all, I would say Bitcoin needs to get back above the bull market support band. Okay, so if Bitcoin gets back above that, let's say it gets above 53K, 52, 53K, if it can do that, And then if it hangs out at those levels, maybe 55, 60K, and Ethereum maintains the strength that we've been seeing. I mean, it's been a little bit weaker over the last week or two, but if it maintains that strength over the macro scale, and Bitcoin's just kind of hanging out above the 20 week, then sure, Ethereum could rally against Bitcoin. But again, that's the reason why I'm also focusing a lot on Ethereum. Altcoin plays remain highly speculative. I think every portfolio should have altcoins in it because of the potential upside, but I don't think you should be betting the family farm on altcoins, right? This is just my own risk tolerance approach, and I understand that not everyone agrees with it. But I have to express what I'm doing so that you guys understand. And then, of course, if you decide to take on more risk, then that's fine, right? That's fine. So I want to go through the dominance here because we can also color code it based on whether Bitcoin's above the 20-week moving average or below the 20-week moving average. Okay, so if we look at this, we can see clearly, right? I mean, there is this area over here, which we'll talk about in a minute. But look, back in 2018, Bitcoin was below the 20-week moving average, right? When it got below it, the dominance went up. You can also see earlier this year, we speculated that the dominance would go up when Bitcoin's below the 20-week. And that's what it did, right? When Bitcoin was below the 20-week moving average, we'd expect the dominance to go up. And it went up. Okay? Now, it just turned red again. So, even over here, you could argue that, well, still technically it did go up. Even here, it still technically went up, even if there was some volatility all over the place for it. So, I think the hard part is on a day-to-day basis when people look at these charts, and you might see an altcoin surge by 20% or 15% or something. But those are riskier plays. Okay, so again, the main coins I have in my portfolio in order are Bitcoin and Ethereum. After that, I have ADA and DOT, which are more or less tied. After that, it's Avalanche. After that, I still believe it's technically Link, but Matic is not that far away. And then I have some other smaller bags as well, as you guys know, right? And like Solana, Luna, and a few others that we've mentioned. But look, I mean, when we look at this chart, and right now Bitcoin's below the 20-week moving average. That's just what it is, right? Whether we want it to be below it or not is a completely different story. It's below the 20-week moving average. And when Bitcoin's below the 20-week, the market is somewhat bearish. I mean, again, that's just the way it is until we get back above it. And you can kind of feel it, right? I mean, the market, it doesn't feel like, there's a lot of, there's not like, a lot of people in the cryptoverse don't have like that kick in their step right now. Why? Because it's like every pump just gets sold, okay? We're below the bull market support band. So a lot of people are bearish. And until we get back above it, then I would say it's better to be cautious than to get too risky. That's just my opinion. So you can see, again, Bitcoin dominance pumped while Bitcoin's below the 20-week. And then the minute it got above it, that's when altcoins surged back, right? That's when altcoins surged back. And then going into Q4, Bitcoin dominance just came right back. And then at the very end of Q4, we've come all the way back down. But now Bitcoin's back below the 20-week moving average. So that's, it certainly is an interesting spot to be, because if Bitcoin stays below the 20-week moving average, then you have to I would have to imagine that there's a good chance the Bitcoin dominance will go back up. And if we get back above the 20-week and then hang out at the 20-week like we did last time, then the Bitcoin dominance can come back down. But if Bitcoin goes parabolic, then the Bitcoin dominance goes up. Now, there is this phase over here, but you also have to understand, too, that this was a phase when Bitcoin's dominance was like 90%. There wasn't really a whole lot of cryptocurrencies at the time, so I'm not sure how much you could take this to the bank. This was also during a bear market / accumulation phase, okay? Which this one was when there weren't many cryptocurrencies. Again, this is 2014. We didn't even have Ethereum. We didn't have Ethereum back then. But at the very end of that 2013 parabolic rally, you can see Bitcoin got below the 20-week moving average, and the initial impulse was, first went down slightly, but then it still trended up over the following weeks and months. Okay, and then later on, it actually the dominance dumped back down, but that was actually well into 2014, closing in on the end of the bear market. Because again, this is 2014 to 2016. And so you can see the initial thing that it did after that blow-off peak was it went up. Okay, it went up here. It did first go down, but more or less you could still argue it was up from when it first went below it, and then so on and so forth. Okay, we went up here, one dot. Now we have two dots. We'll see what happens. But I will focus again majority on Bitcoin and Ethereum. This is if you look at the altcoin dominance. Okay, so it's interesting because you can kind of visualize these like bubbles that form the altcoin dominance, and then it comes back down, and then you get these bubbles that form. Um, so we'll see what happens here as we continue to navigate. This one color codes it by Bitcoin being below the prior market cycle top or above the prior market cycle top, right? So it was below the prior all-time high, above the prior all-time high. Dominance shot down, and then it came back up. And then guess what happened, right? We hit the new all-time high for Bitcoin. Initially, the dominance dumped because it was after the parabolic rally, right? After the parabolic rally, and then we came up. Okay, so now here again, Bitcoin above the prior all-time high. We got above it. We saw it initially go down. Now here's the thing. We don't know yet what the market cycle top is. I mean, I don't think 69K is the top. There has to be a scenario where it is. But again, I still would argue that lengthening cycles is the most likely scenario. But some people, and I know in the group, do think 69K is the top. So if it is the top, then that means these dark blue should already be considered light blue because they're now below the prior market cycle top, and that means we'd be somewhere in this area where they would be starting to turn light blue. Okay, but even in that sense, it would seem to reason that if that were the case, it would. I mean, following this pattern, it would seem that altcoins could still surge for a while, which doesn't really make a whole lot of sense at this phase, considering the Bitcoin's below the 20-week. And then if you combine it all together, this is what you get. So it's color-coded green if it's above the 20-week, red if it's below the 20-week, dark blue if it's above the prior all-time high, light blue if it's below the prior all-time high. Knowing what we know today, this is what you get. Okay, so right now we're in the dark blue and dark red phase, which is we are above the prior all-time high, but we're below the 20-week moving average. Okay, and the only other time we've seen that was back over here, and you can see that during that time period, the dominance in fact did go up for a little while. Okay, so that's where we are today. So let's go talk about the charts. All right, and I want to cover a lot of strategy talk because I think a lot of people want like a one-size-fits-all solution. They want to say, all right, well, this is what's going to happen, therefore this is what I should do. But the reality is when we have a group this size, everyone has so many different strategies that they want to employ. They have a different risk tolerance. Again, if you're in your 20s, you're going to be more risky than if you're in your 60s. If you have a lot of capital, you probably want to be more conservative and preserve your wealth and grow your wealth in a more responsible manner. If you don't have as much, then maybe you don't really care about preserving it. You just would rather bet the family farm on something and hope it pans out. And if it doesn't, well, then who cares, right? I know some people follow that strategy. And so that's why my strategy does not necessarily suit everyone. I am more risk averse, okay? If you want to be riskier, then I would recommend getting more altcoins, okay? If you want to be more conservative, then you should be focused mostly on Bitcoin and Ethereum with some sprinkling in of altcoins. So it depends on how risky you want to be. Now, with that said, some people keep asking me, what if this is the bear market, right? What if this is the bear market and 69K is the top and we're not going to come back until 2024, 2025, right? I've gotten this question more times than I can even think to imagine over the last 2 weeks, okay? Look, the first thing I'll say is, I want to try to address every strategy here. The first thing I'll say is this. Look, a lengthened market cycle, if the theory does prove to be correct, which it hasn't proven yet. I mean, it's technically lengthened from the halving, but I didn't make the theory off the halving, right? I based the theory off the market cycle bottom, right? It was based on the market cycle bottom. It has not technically lengthened yet, okay? The market cycle has not technically lengthened yet. And I'm still counting on it to lengthen. This is what I'm looking forward to, and I hope it pans out, and I think it will pan out. But that doesn't mean it's going to pan out 2 weeks from now, right? It doesn't mean it's going to pan out next month. There's so many people that have these accelerated timeframes in their head because everyone else is telling them that it has to go up tomorrow, otherwise we're out of time, okay? This could drag on for a while. As I've said forever, I mean, sure, I mean, it could end in early 2022, but We could go deep into 2022, maybe beyond that. I mean, 2023, I think, is a possibility that we've mentioned since 2019 on the channel. But the question remains, what if, a majority get it wrong, right? Which, I mean, you have to consider, right? You have to at least consider. And I mean, there are some people that of course, are always calling for a bear market. The same people that were calling for a multi-year bear market at 64K are going to be the same ones that call for it at 69K. Okay? I mean, this cycle certainly has a way of making everyone think they're right. Okay? Because over here, everyone who was a bull was right. Over here, everyone who was a bear was right. Over here, everyone who was a bull was right. And what was going on? I mean, everyone who was over here, all the bulls were saying to the bears, you guys said we were all going to go back down to $10,000, and look, that didn't happen. So, the joke's on you. And now the bears are sort of, basically coming back and saying, oh no, we're still going down here. But again, you also have to remember that they said we were going down here, back over here. They were not saying that we were going to go put in a new all-time high. At least not most of them. Okay, so it certainly has been a lot of back and forth, right? And you might anticipate a lengthened cycle to be like this. I mean, how can you have a lengthened cycle without playing in the sandbox for a while? Okay? How can you have a lengthened cycle if Bitcoin just goes parabolic now? I mean, if Bitcoin goes parabolic now, or if it had started going parabolic a couple months ago, and it just did something like this, then how are you going to have a lengthened cycle? Well, you can't. I mean, the market just can't bear it anymore. So the point is to say that you simply are likely not going to get a lengthened cycle if Bitcoin immediately goes parabolic. You have to have a phase where you're just sort of in no man's land. And we could be in no man's land for a while before making another push to the upside. This is what I don't think a lot of people are mentally prepared for. Okay, so even if lengthening cycles is correct, which again I do think it is, there's no guarantee that it's going to immediately present itself tomorrow. Okay, it could be 2 months from now, it could be 6 months from now. I don't know. I don't know how long it's going to take. The point is to say I don't think it's going to be 3 years from now before we put in new all-time highs. But for those people that keep asking me, what if it's a bear market? This is what I'd like to say. Look, you have to consider all possibilities, and if you don't, you're not doing yourself any favors. A lot of people, I think, put themselves into a position where they look at all possible outcomes, they consider the risk involved, and then they make their decision based on that risk. And for me, that means being focused mostly on Bitcoin and Ethereum right now until the market looks better. Bitcoin and Ethereum. I mean, Ethereum's still it's at $4,000 more or less, at $39.86 at the time of this video. It's still holding up relatively well compared to the rest of the asset class. And, if you go look at the Ethereum dominance, it has more or less been trending higher with time. So if you wanted to say speculate, dubiously in fact, on something besides Bitcoin, then look at something where the dominance is going up over the macro scale, and that's Ethereum. I mean, it just is, right? So at least in terms of the blue chips and thinking about which ones are the safest plays. So that's why I'm focused on Bitcoin and Ethereum, because it protects me against the downside risk, in addition to giving me the potential upside. And then I still want to put that 10% into altcoins just in case, right? Just in case that they go parabolic now for whatever reason. I have a bag. That's the reason. And I still have my bags that I've accumulated forever ago. I still have the well-oiled machine set up. I'm earning interest, earning rewards, still letting that run. It helps you get through these bearish phases as well. So do consider that. But I just want people to sort of think in the sense of don't be overexposed into micro caps. That's the point. Especially with Bitcoin below the 20-week moving average. I don't think it makes sense to just, no matter, even if you end up being right, I would still argue that it's a fairly risky play to make. But everyone has their own risk tolerance. So you have to come up with what is your own risk tolerance. What do you want to follow? If you're overexposed in the market and you can't handle downswings, then that is a problem. I mean, that's that. And some people have messaged me over the last couple of weeks, and they were leveraged. And they were leveraged because they thought that Bitcoin was going to go to 98K by the end of November, right? They thought it was going to go to 135K by the end of December. And so, they got leveraged out of their ears for no good reason. I mean, all these models that you see out there, They're just models. All of them are wrong. Some of them are useful, and none of those guys are gonna say that you should be using those models to go leverage trade. That's just irresponsible. So if you find yourself in that position, and I don't imagine I'm talking to a lot of people at this point in the video when I say this, but I know some people here are just constantly leveraging back and forth, longing, shorting, longing, shorting. They keep getting wrecked over and over, and they keep getting wiped out because all these wicks to the downside and all these wicks back up to the upside. Look, I mean, if you're overexposed, you have to do something about that. You have to be able to manage this volatility. A lot of people joined in 2021 this channel. They started following me in 2021. They don't know what it was like in 2019. They don't know what it was like in 2020 because they weren't around crypto back then. But if you were, you remember, I mean, 2019 was brutal in the sense that we came out of this drop to the logarithmic regression, and we came up to 14K, and then we crashed all the way back down to $1,300. And actually, at this point, if you weren't following me, or if you didn't see the risk levels when we talked about them, at this point right here, the risk on Bitcoin reached only, I think, like 0.65 risk or something like that. Like, it wasn't too far away from that. It only reached 0.65 risk. So if you were following, various selling strategies, you would have taken a little bit of profits, right? A little bit of profits, but you would not have taken a lot because you would have been waiting for the much higher risk bands. You'd have been waiting for 0.75 risk, for 0.85 risk, for 0.95 risk, and they just didn't come right then. I mean, we went up to 0.65 risk, but Bitcoin still dropped. I mean, it still dropped 72%. But you have to, I mean, this is why I say with Bitcoin, you have to get in the right mindset of, do you want to take advantage of every 3 to 4x? Or I mean, obviously 3 to 4x now would be incredible for Bitcoin because that would get us to the top of the regression band. But when you're in the fair value, a 3 to 4x isn't going to get you there. So when you're thinking about DCAing for the market cycle, when you're in the bear market, certainly you don't want to sell everything when it's only up 3 to 4x because there has to be a scenario where maybe you just did something like this and went to the upper regression band. Then it's possible that could have happened, but of course it didn't. So you have to consider these different possibilities, okay? Like 2019 was a lot of up and down. 2020, we also saw this move. We saw this move to the downside, and that was pretty brutal as well, which we already measured out in this 2019 to 2020 drop. But even then, we came back up. We went sideways for a long time. We came up, then we got rejected at 12K, back down to the bull market support band, and then we went up. And this was the move everyone was waiting on, right? That was the move everyone was waiting on. A lot of people didn't care about this peak. They DCA'd down here, they DCA'd up here, they DCA'd down here. They didn't care, right? They took profits up here. They took profits on the way up, and then took profits out. I mean, this is certainly some regions out here to take profits out of Bitcoin into alts to ride it because we were above the 20-week moving average. And as you guys know, I was writing a ton of alts back over there. So I think the question now becomes really, everyone wants to know what's going to happen next. Well, historically, we do know that Bitcoin has not dropped below where it held the line at the bull market support band. Okay. Now, that doesn't mean it can't happen for the first time, but it's never happened before. So that'd be the level, 40K, right? 40K would be the level that we would like to see hold. I mean, I don't really want to go back to 40K, to be completely honest. Just because I know I see how the chat room gets. People get really upset. It's almost like 40K today is a lot worse than 30K was back in the summer, just because a lot of people have these unmet expectations of a parabolic Q4 in 2021. That didn't happen. Now everyone's upset about it. So 40K is certainly a big area. I know a lot of people are talking about 40K as a potential area. But I would also say, 40K is certainly important. I'm also looking at that fair value, which is, I mean, it's slow. The upper part of the fair value is getting close to 40K. It's already at 38K. This is where we actually touched earlier in the year when we went down to 30K or so. So you can see that that's sort of slowly coming up here. It's not going to be long before that logarithmic regression band itself is at 40K. Obviously, the fair value is a lot lower. It won't reach 40K until mid 2022 probably. These lengthened cycles, if it does play out, it certainly does seem like it's going to throw you curveballs every step of the way, right? It's going to throw you curveballs every step of the way. It's hard to know, exactly what's going to happen in the short term. I would not go into the next 3 weeks assuming you're going to have a parabolic rally just because someone on YouTube or Twitter told you it was going to be a parabolic rally. I would not assume that. I think the likelihood of that is incredibly small, like so small that Bitcoin is going to go parabolic in the next few weeks just to fulfill some 4-year cycle theory where it has to go parabolic at the very end of the year every 4 years. So let's try to do away with that line of thinking and look at it more conservatively. The way I like to look at the market is to be super conservative, to, so that people kind of assume you're just bearish, but not to say that you're bearish. You just want to be conservative so you have the right mindset, so whenever it does go up, you're pleasantly surprised. So, I look at the market today and I say, well, look, we're technically below the bull market support band. So there certainly is reason why some people are bearish. And I've watched the chat, I've seen the bears, I've seen the bulls, and I still remain macro bullish on Bitcoin. A lot of people are short-term bearish, and a lot of people give them a hard time for being short-term bearish. There's really no reason to give them a hard time for being short-term bearish. We are below the bull market support band. Until we get back above it, the market does feel kind of weak. So to give someone a hard time in the short term, just because they think that we can go back to lower levels, is probably a little bit nonsensical. Of course we could go back to lower levels. Okay, I mean, look, I think at the end of the day, everyone's on the same team in the sense that everyone wants to make money. So if someone's bearish, it's usually because they have a reason to be bearish. If someone's bullish, it's because they have a reason to be bullish. If someone's bearish, maybe they sold. They want it to go down. If someone's bullish, maybe they're buying. They want it to go up. But to give people a hard time for feeling kind of bearish when we're below the 20-week, I don't know why. I mean, we are below the bull market support band. So until we get back above it, the market feels, people don't have that kick in their step right now. What is the level to get above? Well, the 20-week SMA, the 21-week EMA. We like to get back above 52 to 53K. So 52 to 53K right now does appear to be the line in the sand. Okay, so 52 to 53K is where we would like to see Bitcoin get above. If we can get above that and then hold it, then I think a lot of people, a lot of the bears, a lot of the short-term bears would probably flip bullish. And they've said as much, right? A lot of them have said as much. They say, look, we're below the bull market support band. We know that when it's below it, the market feels bearish. But they reserve the right to flip bullish if we get back above this level. Because historically, when we get back above that level, we tend to do quite well for a while. Okay? So we need to get back above that level. Now, fortunately for us, we at least have the weekly close above the 50-week moving average. If we get rid of the bull market support band, you could almost even argue that, maybe the 50-week is the new bull market support. I don't know. Just looking at this market cycle, you can see that ever since May of 2020, we've been above the 50-week moving average, more or less. Okay, we tested it here. If you didn't know anything about the bull market support band, you might just say, well, we tested it here and held it as support, right? Close enough, right? And then you might say, well, we're testing it again. So arguably, it's providing the same level of support that the 20-week moving average provided during the last cycle. But the 50-week is providing that support this cycle. So, but until we get back above the 20-week, I think it's a little, we have to be cautious, okay? So, am I selling my Bitcoin? No. But I also can ride this thing out for a while. Some people, I think, are under the impression that we're going to have a parabolic rally in January, and that constitutes a lengthened cycle. Technically, a January parabolic move is a lengthened cycle, but that would be a very quick lengthened cycle from what I'm thinking it would be. So January parabolic rally, while certainly possible, at least more possible than December, I wouldn't count on it. Okay, I wouldn't count on it. And if you're overexposed in the market and you can't just hang out here and manage the volatility for months and months at a time, then maybe you should reduce your exposure. Okay, you have to be able to manage this volatility. It's the same thing we saw in 2019, same thing we saw in 2020. A lot of volatility to the upside and the downside. But in hindsight, we know those were just accumulation phases, right? In hindsight, it was all just one big accumulation phase, even though you still had corrections. Is this one? High as 72%, right? A 72% correction from March from June until March. Pretty sizable correction for Bitcoin over that time, but at the end of the day, it was still just a long reaccumulation phase. All right. So today, Bitcoin's trading for just below $49,000. I will maintain 50% Bitcoin weekly DCA, 40% ETH, 10% alts. And that's my strategy for now. I will increase my altcoin allocation once the market looks a bit more clear. Okay, once we can get back above that bull market support band, start trending higher, then I'll focus a little bit more on altcoins. Until then, I'm going to focus mostly on Bitcoin and Ethereum, and just pick up a little bit of altcoins here and there. Now, let's go and look at Ethereum. Ethereum, I mean, it's hard to be upset with Ethereum. I know a lot of people are extremely bearish right now, overly bearish. Ethereum right now, I mean, I know these things might not stand the test of time, and maybe next week it'll be below it. Right now, we're still above the prior May top, right? We're still above it, where we currently are. The bull market support band for Ethereum ranges from 3,700 to about 3,800. We're still above those levels right now. We also know, based on historical data, that Ethereum can go sideways for a year. I mean, look at this move. Like, if I were to overlay this move for Ethereum, like, I just want to show you what this would have looked like this cycle. Okay, look at this move. Something like that. Now, do I think Ethereum's going to make a run to 92K? No, right? I don't think that. We're going to have significantly diminished returns if the cycle does lengthen. But I don't want you to focus in on that. I want you to focus in on this phase of the cycle, right? That first peak here, the second peak there, we even had a third peak, and then it rolled over, right? It had this like slow rollover. And why don't I move this up just to give, not to say that this is going to happen, but just to show you what you would have felt back then. So if you look at that, that is how people felt. It was still, I mean, we were still at relatively decent prices, but we still had a ways to go before we ultimately broke out. And you can see that if we sort of line this up based on that first peak, and extrapolate it out, when might it be before Ethereum makes that break to the upside? It could still be many months from now, okay? We don't have to go to 5K or 6K or 7K or 8K next month. It could still be many months from now. And this is just going based on, look at what happened during the prior market cycle. It took a while, right? It took a while. Now, clearly this is not a carbon copy. The current cycle, from the top here, it went down while that other one was going up. And then this one went up while this one was going down. Okay? And they sort of both went up together, and now they're sort of both trending down together. But it's still just one big accumulation phase, in my opinion. This is what it was last cycle. So for me, this would all just be one big accumulation phase for Ethereum, and you have to be conservative, I think. If you're bullish. I mean, if you're bearish, then of course you'd probably just think we're going to go back down to $1,000 or something. But if you're bullish, it does not make sense to keep spouting out it's going to go to 7K, 8K tomorrow, or 10K by the end of the year, or 15K by the end of the year. It makes no sense to do that. Just assume we're in long accumulation. Have the right mindset, right? Assume you're in long reaccumulation, and eventually we'll hope that it breaks out to the upside. But I still would argue we're still a ways away from that. It's probably not going to happen this month. A good chance it doesn't happen next month either. Still could be a while. So be conservative is the best way to go, and then be pleasantly surprised if it exceeds your expectations. I've always found that's the best way to navigate crypto. Now, it does sort of get you some flack if you're constantly saying, well, it's going to take it a while, because people are always like, well, you're so bearish, you should assume. But then the problem is I'd rather be conservative and then be pleasantly surprised than to constantly think we're going to have a breakout next week and then to constantly be let down. So go into 2022 with the mindset that, look, it's going to be a while, probably. These parabolic rallies, they cannot take place back to back. This is why I said, I mean, if anything, this market cycle, if the market cycle is going to lengthen, it would be a very stretched out version of 2013. It's not going to be separated market cycle peaks or local tops by, local top to a market cycle top by only 6 months. It would probably be stretched out well beyond that. Okay? So be cautious, especially until Bitcoin is above the bull market support band. Until then, this is resistance, right? Until then, this is resistance. And you can see that during this last week, we came up to the bull market support band. We also went down to the 50-week, and we oscillated for a while. And now we're still between those two same moving averages, okay? Between the same moving averages. So we have a ways to go, I think. Um, so this is my opinion. If we go look at the risk levels right now, Bitcoin's risk is at 0.415, Ethereum's risk is at 0.427, the total market cap risk is at 0.472. So, I mean, it's still DCA territory. But, some people, and this is one of the things we had in the chat this past week, some people think that just because it's 0.45 risk or zero point 0.5 risk means it can't drop. I mean, no, I mean, the risk levels are there because it could theoretically drop. I mean, if we went to 0.35 risk, that would correspond to 40K. If we went to, to 0.25 risk, that would correspond to 29K. These numbers are theoretically possible, right? They are theoretically possible. That's why the risk levels are there, and they're to show you what the risk is at the time. The risk right now is 0.415, okay? That means the risk is a lot lower than it was the same, this time 8 months ago at the same price. The risk is a lot lower. Back then, when we were trading at 50K, the risk was like 0.75 or 0.85. Today, it's been about 7, 8 months. The risk at the same price is a lot lower. Okay. Now you have to imagine if we keep hanging out at these prices for another 5 months, if we go down and then up, or if we go up and then come back down, or if we just go sideways, then it could be that in many months that the 0.415 risk level could correspond to a higher price. And maybe 48K could be the 0.375 risk level. It just depends on how long it takes us to spend at these levels. So, you have to consider this possibility. So if we go look at some charts, if we go look at the market cycle ROI from the market cycle bottom, remember this was expanded by a year and a half. This one was a year. There's no reason to assume the next peak has to be within the next month. Could still be quite a ways off. If you think that 69K was the top, which, I mean, I don't personally think it is. If you think it is, then, I mean, you're basically just sitting out of the market at this point. I assume, right? I assume you're just sitting out of the market until we get a better buy-in. So the other thing we can go look at, I know the stock market has been doing relatively well, so that's at least good. If you think back to Bitcoin in 2018, one of the bad things that happened for Bitcoin during this drop was also the stock market was sort of just kicking the bucket back then, right? If you go back to January 2018, the stock market, in fact, dropped 12%, which is pretty sizable for the stock market, right? It fell well below the 20-week moving average. It dropped 12%. Today, if you go look at the stock market, we just had to move back up to the upside, okay? And we might be putting in new all-time highs this week for the stock market again. So and by the way, the stock market here dumped in January, about a month after Bitcoin peaked. Okay, right, and it had been above the 20-week moving average a lot leading into that phase. The last time it had touched it was August. We came all the way up to being pretty far extended by January, and then it dropped for a while going into April. Here, we touched the bull market support band in October. We came back up. We touched it again here in November. So more of a systematic retest. No crazy drop in the stock market right now. I mean, of course, we'll have drops in the future, but stock market still looks relatively okay for the time being. All right. So the coins, I've said before, Matic. The video last week, in fact, I said I was not going to DCA Matic anymore unless it drops back below the 0.5 risk level because I don't want to or 0.4 risk level because I don't want to chase it up to these higher risk levels. This week it's back to less than 0.4 risk. Okay, so you could argue that it's back in DCA territory. Okay, albeit still very light in my opinion. Again, if you want to be riskier, no problem. If you want to go riskier, just don't assume that everything has to go parabolic in the next month because if you do, then you might have some unmet expectations. And then, I mean, some other risk levels. DOT is now at 0.327. ADA's at 0.28. Solana's 0.547. Link's 0.288. Obviously, Link's been bleeding against Ethereum forever, so I'm not accumulating that right now. Aave is another one that's been bleeding against Ethereum forever. but its risk level is relatively low. But again, until it stops bleeding against Ethereum, it just doesn't make any sense to me. A lot of these coins have been bleeding against Ethereum, which is again why my Ethereum allocation is as high as it is. So we've covered a lot. I think the main thing to watch for at this point is just to for me, it's just to see, can we get back above the bull market support band? All right, 1 week at a time. It's at 52 to 53K. There's a lot of confluence at that level that we would like to get above to maintain the bullish sentiment. Until then, we remain in the sandbox, right? Until then, we remain in this weird place where half the market thinks it's going to go parabolic in the next 3 weeks, half the market thinks it's going to dump to 20K in the next 2 months, and then everyone's sort of just split on what they think is going to happen, because this cycle has been very different from every other cycle, right? I mean, how many cycles after we failed to hold the 20-week did we get back above it and then hold the line at the 20-week? None. This is the first time it's ever happened, okay? It's the first time, so we'll have to continue to take this 1 week at a time. So, really, the moral of the video is you can protect yourself against the downside if you want the exposure to crypto by focusing mostly on Bitcoin and ETH. Slight altcoin accumulation is fine as long as you're doing it and being responsible with it and managing your downside risk and not betting the family farm on altcoins. If you're in your early 20s and you just want to do something silly and crazy and hope it works out, more power to you. Minimize your downside risk. Bitcoin and Ethereum, I think, are the ways you can do that. And a little bit of altcoins, don't get too risky. If you were overexposed in the market and you're doing things like leverage trading and you're expecting certain levels to hold. I know some people thought that we would never go below 50K again, and so they were messaging me saying, look, we went below 50K, I got liquidated. Look, I can't help you with that. I mean, this is not meant for leverage trading. So just to speak to everyone out there, right? I cannot help you with using this stuff to leverage trade, because you can get these wicks to the downside, 10K candles to the upside and the downside. They're really hard to predict. No one can predict them, and a lot of times they're just like these liquidation hunts. Okay, there's these liquidation hunts that take place, and they just they wipe everyone out. So look, I mean, this is the moral of the story, right? This is the moral of the story. Bitcoin and Ethereum, minimize your downside risk. A little bit of altcoins. Don't bet the family farm. If you're overexposed, you might want to not be so overexposed so that you can handle the volatility, especially with the expectation that there's no guarantees we're going to go parabolic here in the next couple of months, and that it could still be extended out for quite some time. All right. So I think that'll wrap it up. Thank you guys for tuning in. Leave any comments down below, and I'll see you next time.